Right, well, the stock market seems to be having more of a breather session after a panic of sorts yesterday on tariff uncertainty. Now that there is a reprieve on tariffs, at least in North America, what is the outlook for investing? Barry Schwartz of Baskin Wealth Management joining us as part of our opening bell coverage. What was yesterday like for you, Mr. Schwartz?
Welcome to crazy. That's what else can I tell you, John? Stupid as a stupid does, but thankfully, as expected, Trump backed off on it, and obviously we should be breathing a sigh of relief. But on the other hand, we're like, okay, what's going to happen tomorrow, right? So get used to it. The next 4 years are going to be a roller coaster. This is just the way the markets are. I don't want to, these are the conversations that we're going to have with clients, and we'll have to calm them down. And I know the right things to do.
Yeah.
Own good companies and be patient.
Right. Okay, so as an example, yesterday morning, you see all these industries that could be impacted by tariffs that are really moving around. So, if you're focusing on companies that you feel are solid bets, how much of a Trump consideration goes into those calls over the long term, or do you just, you set it and forget it? You expect that there could be something that gets caught up in the mix. I mean, how do you approach that?
Well, you have to decide what type of investor you are. And if you're a trader, or you're trying to take advantage of arbitrage opportunities, or you think stocks have been beaten up too much versus the actual impact, then maybe there was opportunities yesterday on names like BRP or Bombardier or the railroads. But for Baskin Wealth clients, we're interested in owning high quality, long-term investments that have great returns on investments. And so we're very underweight Canada. We own no manufacturers. So at one point, John, yesterday, it didn't end up great for our clients, but at one point I was making money yesterday. The Canadian dollar was down. A lot of the stocks that we own, Costco was up big, Visa was up. We had a few names in our portfolio that was down. Really, the biggest impact for us was a company called TFI International, which is like a railroad. It's a shipper of goods across border. So that was the most impactful for us. The rest, it was kind of just like another Monday.
Yeah. Let me stay on that theme for just 1 second, because you mentioned BRP, which makes Sea-Doos and Ski-Doos. It was under some pressure yesterday. We spoke to an analyst who downgraded this stock, and he was pretty simple in his explanation. He said, look, this company has a very deeply integrated supply chain. So if Mexico has tariff troubles, BRP is going to have some challenges. So if you're, and here's the stock, it's not roaring back, but it's up a little bit today. I guess, are you saying that, because I know you like tech stocks and stuff like that, but are you saying that manufacturing businesses in North America, buyer beware right now?
Well, I've been saying that for a long time.
Okay.
I just don't like these types of businesses. We like more asset-light businesses. The BRP has other problems, of course, and that's just the overhang from the pandemic when everybody was buying all, Sea-Doos and snowmobiles and buying cottages. Right. That's just over. So if you look at the fundamental results of his business, not going in the right direction for the last few years, and it's hard to see it getting out of it until the cycle picks up. But a 25% tariff, if that comes back, I mean, this stock is essentially a zero. If that continues, it's unsustainable. Like, the business doesn't make any sense. Magna's business doesn't make any sense, right? So these companies will have to figure out and adjust really quickly if that's going to be the new norm. But I'm hopeful that that's absolutely not the case. And this was just a negotiating tactic to get what Trump wants, and he's going to win because we got no other choice in Canada. 70% of our exports go to the U.S.
And as you mentioned, you have leaned into a lot of big U.S. companies over the years, and they've had some solid, strong performance over the long term. I just want to add to the conversation, because there's all this talk about uncertainty for Canada and worries about our economy and yada, yada, yada. Now, in the stock market, and I know the stock market is not directly correlated with what's actually happening in the economy, but the TSX has risen about 20% in the last 12 months. So anyone who's trying to make a return just investing in the Canadian stock market hasn't necessarily been allowed to see better over the last 12 months.
Yeah, there's no one's crying for stock owners over the last few years, and that's what we've been telling clients. Our clients were up 20% plus for the 2 years in a row. That's not going to continue. A lot of the earnings growth, a lot of the growth has come from multiple expansion. We know that. And Apple's not going to trade at 50 times earnings. So the growth, you have to now own companies where there's earnings growth, where you expect double digits earnings growth. And if you get double digit earnings growth for the next few years on good companies, maybe you don't get multiple expansion, but stocks follow earnings. So you still should do quite well on stocks. And that's what we're trying to do. Avoid companies that are not growing, own companies that we think have a chance of doubling their earnings over the next 5 years. And so there's only one place that I have to be if that's the case. I got to own U.S. and I got to own U.S. high quality and mostly tech.
Okay. Helpful context as always. Very nice.